All right, welcome back to the channel, guys. My name is Robert. Today we are going to talk about our lucid trading strategy. So this strategy is going to be for micros, and it's going to be for the evaluation path. And I told you guys that I would make this video, so let's go ahead and let's just jump right into it. So first, let's just discuss the differences, the main differences in these two different path types, right? So we've got the Lucid Test, which goes to a Lucid Pro, which is the evaluation path. And to do that, you have to pass the evaluation phase before accessing the funded capital. And then once you reach the profit target for the account size that you've selected, while following all your rules, your account will upgrade automatically to Lucid Pro. Then there's the consistency rule where you have a 35% cap. Your biggest single day of profit can't exceed 35%. And then there's your profitable days, and it requires at least 5 profitable trading days per payout cycle. Here's your profit split, which is the traders keep 100% of their first $10,000 in total profits, and then it's a 90-10 split, 90% to the trader. And then there's the lower cost. So evaluations are a one-time fee, and they can be passed in a single day. So let's go to the second one, which is the Lucid Direct. This is not the strategy for Lucid Direct, and that's the instant funding, and it gives traders immediate access to simulated capital without evaluations. You start trading for real payouts from day one. Then there's your consistency rule, which is smaller. It's a 20% cap, and that's stricter than Lucid at 20% instead of the 35% trading days. So it requires 8 trading days before the first payout and between subsequent resets. And your profit goals for the 50K account, for example, your first profit goal is $3,000, and then it's $2,500 for subsequent payouts. Your profit split is the same as Lucid Pro. It's 100% of the first 10K, and then it's a 90-10 split. And these are higher costs. They cost more compared to the evaluations to get started. So the two different paths, you've got the evaluation route, Lucid Test to Lucid Pro, and then you get called up to Lucid Live after 6 payouts. And then the direct route to straight to funded, Lucid Direct, and that one goes to Lucid Live, same thing, after 6 payouts. So here's some things to consider when you're picking your path. Now remember, this strategy is for the evaluation path, but the evaluation path isn't for everybody. So I'm just going to include this real quick for you guys to help you a little bit. So the first thing you want to think about is the cost, how much it costs and how much money it's going to be. It's not for everybody. It's a little more expensive, though it does get you there faster, right? Then the other thing to consider is how much time you have. With the direct funding, you are eligible to get payouts, quickly. Within, all you have to do is meet the criteria that we just talked about, and you can be receiving your first payout, right away within 8 days if you have a profitable strategy. So the next thing is your strategy type. And this is super important. It depends on what type of strategy you have, really. If you're a scalper, Lucid Direct is probably okay. But if you're a swing or you like to run contracts or micros or anything like that, then Lucid Test, the Lucid Pro evaluation path would probably be better. So let's go ahead and talk about what I do personally this is just an overview. Again, I told you this is going to be a strategy, so we're going to talk about an overview of the way that I trade this and what I do in order to get where I'm at, right? So I trade auction market theory, order flow confirmation. And the first thing that I do is I start with weekly TPOs to get a bigger picture and the first levels that I'm going to look at. And then I dial that down into the daily TPO, and I fine-tune my levels, and then I use my bigger picture range chart to fine-tune even farther. And once I have my levels where I want them, I make my plan based on auction market theory. Are we going to stay in balance, or are we going to expand? Are we going to try to expand and fail? That's my favorite type of trade. Then I typically wait for at least 1 hour, sometimes an hour and a half after the market opens before I place trades. And this allows me the A, B, and C periods to form on the daily TPO chart. And depending on where that C period closes, I can have a better idea of my direction. So I prefer to buy pullbacks over phase. Those are my basic system rules. I'm not going to teach you auction market theory in 5 minutes here on a YouTube video, but that's basically what I trade. I trade auction market theory with order flow confirmation. Okay, cool. Also, if you don't know what that means and you want to know what that means, there's a link down in the description. I learned at Trade Pro Academy. You can see that there will be some links available for you if you want to learn more about this particular strategy. That's not the point of this video. The point of this video is the money management part and the risk management part. Because if you can do the money management and the risk management part, you're in a much better place than if you can. So let's take a look here. I made this slide. This is something that I actually look at each day I kind of look at this slide show that I'm going to show you right here before the market opens, because I like to remind myself about what some of the rules are that I'm trying to follow. I try to remind myself of what it is that I'm trying to do here. So this is a quote from Ed Seykota. He's one of the market wizards. You're probably familiar with him. This quote is a quote that bothers people. It bothered me when I first heard it. I thought that it wasn't true. I didn't really care for this quote one bit. A losing trader can do little to transform himself into a winning trader. A losing trader is not going to want to transform. That's the kind of thing winning traders do. Oh, what a quote. This is terrible. Okay, so let's take a look now. These are my rules around trading analysis, and we just talked about those things that I went over. Well, this is the quick synopsis of that. Much better. Draw levels on chart, and that's based on the weekly volume profile, the major cumulative ledges. I dial it in, and then refine my levels on the daily. That's step 2. So refine the levels on the daily market profile and the volume profile. And then step 3 is to create a plan based on auctions. And I define good pullback continuation areas, also fade areas. If there's a good area to fade, I want to put that on there as well. Then I go to my trading rules. Now this is important. This is the execution part. This is the part that I absolutely have to do these things. I have to do them. And if I'm not doing them, I have to stop trading. Because if I don't do these things, I'm wasting my own time. And it's hard because I'm not a great rule follower. But I'm trying to learn to be in order to do this. I want this. If I want this bad enough, I will change. That's what Ed Seykota is talking about. If I'm a winning trader, I make the changes that are necessary. Losing traders don't. They don't make the changes that are necessary. They blame the market. They blame the environment. They blame the prop firm. They blame everything but their own lack of discipline, self-control, their own mental attitude, their own inability to do the things that they said that they were going to do. And these are my rules here, okay? Little pep talk. Supposed to be encouraging, positive video. Let's go for it. Number 1, I must learn. I must learn to take a loss. After a loss, there will be a 2 to 5 minute break. No more back-to-back trading. I've had quite a problem with that in the past where I'm trading. Take a loss. I'm done for the 5 minutes. Regroup. Let it rotate a little bit. Figure out what it's going to do. Number 2, key levels. I trade in and around those key levels only, the levels that I put on my plan. I want to trade around those. I don't want to trade in the middle. I don't want to trade, willy-nilly somewhere. Oh, I think it's going to go up. Oh, I think it's going to go down. I want to trade those key levels that have a better chance of reacting, a better chance of big players being involved. Number 3, I start small. Now, in this particular strategy, this start small part is for after I've got my buffer in the pro account. In the beginning, we're just trading 1 MNQ or 2 MES. That's it. 1 MNQ, 2 MES. They're put on as a feeler to start building out a position to add to. But in the beginning, we're going 1-to-1 for risk to reward. We're going to use 1 MNQ, 2 MES. That's it. For a 50K account or like a 25K account for the smaller account. Obviously, we can make this bigger for bigger accounts. And if you need help with that, drop me a comment down below and we'll get that started. Join my Discord, ask me questions. Number 4. So only planned trades or A+ setups. I need planned trades or A+ setups. And that includes my IB trades, what I call NAR and NAA, which is new auction rejection, new auction acceptance. Those are A+ trades for me. Or trades that I have marked out on my plan. Those are the only trades that I want to take. And my 5th step, this is an order flow thing, is that my trades must be qualified. I actually have a checklist that I qualify my trades with to understand, am I getting a key level? Do I see the reactivity that I want? Do I see stuck traders? What do I see on this thing? How many of these boxes can I check off? Because I want to make sure that I have the best chance of success with this trade. And then number 6 is no weak order flow or forced entries, right? So if I'm not going against the grain, if it's a hopium thing, I'm going to scratch it. If I put this position on and there's just, it's not there. They're not there. I will scratch it and get out. I don't care if it goes without me. If there's not real confirmation, I don't want to be in the trade. And if I get in the trade, I'm not going to sit there going, oh, I hope it goes. I'm just going to get back out. That's all I'm going to do. It's real simple. Number 7, sometimes fades take 2 tries. And then I make sure that I'm doing them at different prices. 2 tries is the maximum before I go to take a walk. The 2 try thing is like, you try it once here, and then they trade down a little bit farther, and then you try it again down here. 2 times. That's it. If I'm wrong after the second one, I'm wrong. That's it. No more trying it. No more trying to be right. But fades do sometimes, especially the really good fades, sometimes they take 2 tries. 2, not 20, 2. 2 tries. Then number 8 is fight the urge. Stay patient using my limit orders. I know what I need to do, so just do it. Not market orders, not impulsively chasing, not click. I'm trying to be patient and step back, use limit orders, get it at the price that I want to get in at, and go that route instead of the chasing route. Okay, and then number 9 is no more one-touch bounces, and it just leads to scratching and chasing. One-touch bounces is when it tests my level and then immediately rips up and you try to mark it in to chase it. I don't do that anymore because it works like 1 out of 10 times. The other 9 times, it's going to roll back on me and stop me out. So I don't really want to do that. That's a low probability trade. But my FOMO and my impulsivity makes me want to chase it. So no more one-touch bounce. Okay, now the important part, and this is important. This was really, really important. It's as important as following the other rules. Now this is for a 25K account that has a $1,000 drawdown. So the daily stop loss is $100. It's 1/10. You can do it for any other size as well. If it's the 50K and it's a $2,000 drawdown, your daily stop loss is $200. And I hard code this. I put it into R Trader Pro. I trade on CR Chart with Rhythmic, but you can put it into Trade of 8. You can put it into a lot of the other, probably Motive Wave, all the different platforms. There's a way that exists that you can put a stop with a number on it. That way you can lock yourself out for the session if you hit that stop. TradingView has it. I know the Project X stuff has it. You can lock yourself out. That way, you don't go past your daily stop limit. This is a non-negotiable thing. Anyway, number 2, it's a 1-to-1 risk reward. So a 1-to-1 risk reward through the test, and then all the way up through building the buffer in the evaluation. And then after that, we can start scaling up and adding more contracts and adjusting our profit targets and all that. But for the first part, the test, and then all the way through the buffer, it's a 1-to-1 risk reward. That's great. Okay, number 3. Follow the 35% consistency rule. That's after the test is over. And then once you get into Lucid Pro, where you're going for the payouts, you've got to have the 35% consistency rule in the Lucid Pro account. So I have a whole video on this. And I say here, there's none in test. There's no consistency rule in test. You can pass on 1 day. But then there's 350 in the Lucid Pro account. Again, that's for a 25K account. And the reason it's 350 is because all the payout targets are $1,000. So if your max payout is $1,000, then the maximum that you should make in a single trading day is 35%, which is 350 of 1,000. And that will give you, so that you can go in the fastest way possible to get to the payout. Otherwise, if you make too much, you got to make more to meet the consistency rule. So basically, you're going to follow the test rules and pass the test stage. You're doing the 1-to-1 now. You're not going crazy. You're going 1-to-1. And why are we going 1-to-1? Well, because we're going to determine by going 1-to-1, a couple things are going to happen. Number 1, your psychology will be better. It's hard to do 1-to-2 and 1-to-3. It's hard to hold the trades. It's hard to stay in them, especially when you're new. And you're probably going to wind up scratching them and over managing them. And let's go 1-to-1. Why? Because it's easier on your psychology, and we can see what your win rate is. If it's over 50%, you'll be profitable. If it's under 50% on 1-to-1, there's no reason on God's earth you would be doing 1-to-2 or 1-to-3. You have to make sure your entries are nailed down first. And by doing this, by going 1-to-1, you can determine whether or not you're actually profitable. You can determine if you actually can enter the market well enough to do, to then move on to go to 1-to-2 and 1-to-3, and some of the harder, areas where you're going to hold trades longer, and the more uncomfortable stuff. But let's start here and find out whether or not our profit target, find out whether or not we're actually profitable, find out whether or not we're entering the market well. So to pass the test, you just got to follow the rules. There's an end-of-day drawdown. You got to make sure you don't hit the daily loss limit. And then there's a profit target for each size. There's also another 150K, which is, I think the profit target is 9,000 and the max loss limit is 4,500. It's 1-to-2. And you can see all the different, it's actually really, really great. The rules are wonderful. They're the best rules that I've ever seen in prop space. And so once you hit your profit target, then the next step, you're going to stay 1-to-1 because you want to stay 1-to-1 to build that buffer. So after you pass, you complete the buffer, which is the initial max loss limit plus $100. And then you want to build that buffer and then get yourself to the first profit target, all on 1-to-1. We're doing this 1-to-1 the whole way, which I know is irritating, and it can be like it's slower, and it's not going to come as quickly as like just YOLOing a bunch of contracts. But the thing is, you're going to really know if you have a system and if you're profitable, because with the way that you don't have to worry about how long it's going to take, because there's no subscription fee with Lucid. You just pay the fee one time and that's it. So you have plenty of time to test this out. You may think to yourself, yeah, but I got to do it right now. And no, you don't. You have to find out whether or not you're actually profitable. Otherwise, you're just wasting your time. If you try to push this and go too fast without really truly understanding what your stats and what your style are, then you're wasting your time, because it's never going to happen for you. Look, the stats on this are bad. The stats on funded traders getting to live, it's really, really bad. I'll make another video on it sometime. It's horrible. Trust me with this. Stay 1-to-1 and try to see what your win rate is and whether or not you even enter the market well, whether or not the places that you pick to trade at actually are good places to trade at. You'll find out, right? So you keep trading, but once you get past that buffer and you're now going, you're going to get your first and second payouts, you're starting to move down that road, then you can change your risk reward to like 1 to 1.5 or 1 to 2 or 1 to 3. And it depends on what the journaling tells you, so what I mean by that is you're taking screenshots of your entries and exits each day, and you're looking, okay, let's say that you did go 1-to-1 and you win all that way. I want you to go back and look at your entries and exits and see, if I had held these trades, would they have panned out? Am I entering the market at places that actually can produce a 1 to 2 or a 1 to 3 or 4 or 5 risk to reward? Or am I just getting lucky on little tiny scalps like inside the rotations, and I'm not really picking the entries out? And look, it doesn't matter. If you can be over 50%, you can stay 1-to-1 and still get payouts. And that's fine. That's what we're here for. We're here to get payouts. We're not here to say, oh, I got a 1-to-6 trade, and nobody cares. Nobody cares. Nobody cares. It's nice for the ego, but when I'm gone, nobody's going to care if I had a 1 to 3 or a 1 to 5 or any. Nobody cares. What's important is whether or not I'm making consistent withdrawals, which means I'm taking brackets and small pieces out of the market. I don't need to catch all the ticks. I don't need to catch all the moves. That's just pride and ego, and it's silly. Doesn't have anything to do with anything other than posting and go, oh, look at this big trade I have. Yeah, that's nice. Did you make any withdrawals? That's what's important, right? So, okay, now after you get to, let's say that you have one account and you get to your 5th withdrawal. So at this point, this is important. You want to open more test accounts and try to get more withdrawal opportunities for up to 4 more accounts. You can trade up to 5 accounts with them. Once you get to a 6th withdrawal, they're going to move you to live. So you might as well open those other accounts and try to get withdrawals up out of them as well before you move to live. And you may say, well, but Robert, I want to be a live trader. That's the whole point of this thing. And you're right, it is. But I'm going to tell you something here. After the 6th withdrawal on any account, they will call you to live. You want to avoid this as long as you can. You have to register as a professional with the CME. You're going to have to register as a professional with Rhythmic and sign those new data agreements. The ones you sign in the beginning where you always pick non-professional, you're going to be a professional. Why? Because you're trading someone else's money. Once you're registered as a professional, you are going to have wicked fees, and you're going to have to pay them everywhere you trade, and they're going to know everywhere you trade. It's not like you can hide from it. Once you're registered, you're a professional, a financial professional, and you're going to have to pay those extra fees. That's fine if you're profitable, but I would stay away from it. Let's get a whole bunch more payouts on all these other accounts first and then move there. And so if your 1-to-1 shows that you have a positive expectancy, what you really want to do is go back and look at your screenshots of the entries and exits. Like I said, do the majority of your entries and exits go way beyond the 1-to-1 target? If they do, increase your target. Now that you have some buffer and you don't have to worry anymore about the trailing drawdown, it's locked in and you have room to wiggle room to work with. But this is my strategy for a beginner. This is my strategy for someone who has not proven themselves yet, who has never taken a payout. I want you to do these things, and if you can consistently do this, what's the worst that can happen? Well, I'm trading 1-to-1, and I'm actually not profitable. My win rate's below 50%, and I'm kind of slowly going down. Okay, you know what though? That's great, because now you know that there's things that you need to work on. My strategy's not right. I don't really have an edge. These are things you need to know. You need to desperately know them before you spend a bunch of money YOLOing contracts, trying to pass evaluations for no reason whatsoever, because the odds of getting a payout are so low for a person that's gambling. You don't want to do that. You might get a payout. And do you want to live in that world where you're thinking, oh, maybe I'll get one. I might get one. That would be nice. I mean, what are we playing the lottery over here? I don't think so. Anyway, that's what I got for you guys today. That's the strategy that I think that would be the best for someone who's just starting out in this. 1-to-1, and let's stay small and see what our stats look like and see if we can make some improvements and become a better trader. I will see you guys on the next one.